Good evening, everybody. Welcome. My name is Dan Calamucci, and the hat I'm wearing tonight is one of the vice chairs of the San Francisco Democratic Party, as well as the co-chair of our events subcommittee. And I'd like to just welcome you all tonight on behalf of the party to our really timely and important panel. And a real tremendous and special thanks to the Westside Family Democratic Club, as well as to the incredible speakers that we have tonight. This is going to be really great. Just a quick plug, the party will be hosting more events like this in the future. We'd encourage you to join our mailing list, follow our socials to get more information, including information on some phone banks. We are going to be co-hosting every Tuesday now into Wisconsin for their Supreme Court race. And further, the party is committed to helping produce more events and actions like tonight, events that educate, events that are timely, and events that speak to and lift up the concerns of everyday San Franciscans. So if you've got an idea for some sort of event, some sort of action that you think the party can help out on, please do reach out directly to me, reach out to Babak or to anybody in the party, and we're going to work with you on that. So with that, thank you. And I'm going to turn it over to Sid.
Hi, everybody. Welcome. I am Sin. I am on the board of Westside Family Dem Club. We are the co-host of this event, and we aim to be a voice for families on the west side of San Francisco. We are into pragmatic progressivism and very pro-housing, pro-transit, excellent public schools, safe and clean streets, and making sure that San Francisco is a place where families feel welcome. With that, Sarah, I'll turn it over to you so that you could kick off the program.
Great. Thanks, Dan and Sin, and thanks for hosting this important discussion. I think this is, yeah, as you said, a really timely. So welcome, everyone. My name is Sarah Atkinson. I'm the Hazard Resilience Senior Policy Manager at SPUR. We are a nonprofit public policy and planning organization based in San Francisco, but we work across the Bay Area. And I'm from the East Bay. I studied city planning, have background in community resilience, and I now live in San Francisco. I'm a renter, so I don't, directly deal with these issues of insurance, but I have definitely been working on these issues in my role at SPUR. So today I am the moderator for this incredible panel on understanding the California property insurance crisis, causes, consequences, and solutions. And I'm going to give a short intro and introduce each of our speakers, and then we'll go through questions, prepared questions for the speakers, and then we'll have time for audience questions. So when you have questions, please submit them to the Q&A, and we will get to those towards the end of the event. Okay, so California's growing climate volatility is already rapidly transforming our cities, whether through disasters or through preemptive changes in policy and planning to drive adaptation. Unfortunately, a multitude of factors have at the same time driven private insurers to raise premiums and drop home insurance policies altogether in some zip codes, leaving many property owners vulnerable. One of the most influential tools for recovering from disasters and directing hazard adaptation is insurance. Unfortunately, due to past policies, land use decisions, and other factors, we're struggling through this insurance crisis that is having far-reaching impacts on homeowners, renters like me, and the overall economy, driving up costs and deepening the affordability challenges in our communities. The climate crisis and the recent LA fires underscore the urgent need for an innovative approach to home insurance and risk mitigation. The choices California makes today in addressing our insurance crisis will influence our state's ability to adapt to this new normal of climate change. So today, with an amazing panel of experts, we will examine the factors that have contributed to the crisis, from climate change to regulatory challenges and market instability. We'll connect the insurance crisis to California's housing access and affordability crises, and we will discuss legislation actions and other risk mitigation strategies that are currently being taken to fix the insurance industry, as well as other actions that need to be taken to move forward. So we have three incredible panelists today. First, we have Julia Svetlana Juarez, who's the Deputy Commissioner of the California Department of Insurance. Julia leads the Department of Insurance Community Relations and Outreach Branch. Since her appointment in 2019, the department has held more than 1,200 town halls, presentations, and events, meeting with thousands of consumers throughout the state who have been adversely affected by the state's insurance crisis due to unprecedented wildfires, floods, and earthquakes, and the pandemic. With over 25 years of public service experience, Julia oversees constituent outreach with federal, state, and local elected officials or offices, and leads the department's expanded efforts to assist wildfire survivors, local governments, small businesses, and consumers in accessing the department's many services. Julia holds a Bachelor of Arts in English Literature and Political Science from Point Loma Nazarene University, as well as a master's degree in Leadership and Organizational Studies from Azusa Pacific University. Welcome, Julia. Next, we have Amy Bach, who's the co-founder and executive director of United Policyholders. Amy Bach has been a professional insurance consumer advocate since 1985 and an attorney since 1989. She co-founded United Policyholders in 1991 and serves as the organization's executive director and primary spokesperson, shaping and overseeing the Roadmap to Recovery, Roadmap to Preparedness, and Advocacy and Action programs. A nationally recognized consumer advocate and an expert on insurance trends, claims, coverage, law, and public policy matters, Bach is in her second term as an appointed member of the Federal Advisory Committee on Insurance and is an official consumer representative with the National Association of Insurance Commissioners. She's also the member of the Fire Victim Trust Oversight Committee and a Redwood Credit Union Services Group Associate Board Member. Bach is frequently interviewed in print and broadcast media and is the author of numerous publications, including the Disaster Recovery Handbook, Wise Up, the Savvy Consumer's Guide to Buying Insurance, and a contributor to several editions of Buying Your First Home. And Bach's awards include Person of the Year and Money Magazine's Money Hero. Welcome, Amy.
Thank you. I think I'm gonna have to shorten that bio, that short bio.
There's a lot of great stuff in there. Okay, and finally, Sin Wang. Sin is the VP of the San Francisco Entertainment Commission, board member at the Westside Family Democratic Club, and principal at Wang Insurance Agency, an independent brokerage based in San Francisco, focusing on hospitality, real estate, and tech since 1979. Prior to this, Sin managed global public policy at Airbnb and served as a U.S. diplomat at the State Department, as well as assistant city attorney to 3 cities. Sin is a proud public school mom and lives with her wife and daughter in San Francisco's Outer Sunset neighborhood. Welcome, Sin, and thanks for having us since you're also hosting. Great. Well, yeah, so glad to have you all here and be moderating this panel with each of you. So I'll get us started, and I wanted to start with giving you each a little bit more time to introduce yourselves and the work of, the work you do. There might be many people on this call that aren't as familiar with the insurance industry and what each of, what the California Department of Insurance does, what United Policyholders does, what an independent brokerage agency does. So take a second and kind of like introduce yourself a little more and your relationship to this, this conversation. And I think I want to start with Sin, if that's okay.
Sure. From an insurance perspective, we run an independent agency. So we are essentially the experts and intermediaries between consumers and the various insurers. Because we're independent, you may be aware of certain carriers that have captive brokers, like a Farmers or State Farm. Essentially, their brokers can only sell their product. So a farmer's agent just sells farmers insurance. We're independent. We work with over 50 carriers. So we do get a very macro look of the insurance landscape, and we work with everything from homeowners insurance and renters and life and group benefits to the full landscape of commercial insurance. one of our top specialties is like hospitality, apartment buildings, HOAs, that kind of thing. It's all being affected by the insurance crisis. Right now, our phones are ringing off the hook. Like I can't even handle the business that's coming in just from non-renewals. And unfortunately, there's not a lot of places to put this business nowadays. So that I look forward to digging into that a little bit more and to hearing from my fellow panelists today.
Great, thanks. And Julia, would you like to go next, and going from kind of the individual to and local to the state level?
Absolutely. Thank you for having me, and it's a pleasure to be here with all of you. I have the privilege of working for the Department of Insurance under Insurance Commissioner Ricardo Lara when the commissioner was first elected in 2019. We very much so saw the need to understand exactly where insurance, the communities that were being affected by insurance, where they were at their own in their own communities, in their own areas. For many years, people thought the issue of insurance is, a Northern California issue because of the fires, or something, out in the WUI out there. And that is not at all the case. We have seen that everyone throughout the state is truly having a hard time with insurance, either the increases, but then also, just the availability of insurance has just completely just been decimated. And so throughout the first couple of years with Commissioner Lara, we just went and met with all of the different communities and all the different and the insurance companies and all the different stakeholders to make sure that the Department of Insurance was available to to everyone, to understand what was going on, to have somebody that people can speak with, and then also be able to bring the consumer services outside of a phone and outside of Sacramento, but actually in local communities. And so that's what I have been charged with, is just going to local communities and having these conversations, just one-on-one conversations with folks, and then community groups where we can actually discuss what are the issues and what can we do, not just as a department to help, but then also as a community, what can we do together to improve the market as a whole. So that is what we have been working on. So.
Wonderful, thank you, Julia. Amy, and if you also want to talk about your kind of state and like national level work too, that'd be great.
Okay, thank you. So first of all, I want to thank Sin for in bringing us all together here. I was pretty excited to meet her last year, and to know that there's an independent agent here in San Francisco that's not just taking care of her clients, but also has an eye on the big picture, and some of the public policy work that has to get done to really get us through an unprecedented property insurance crisis, both here in California, but also in other states. And so United Policyholders is a very unique charity. We all know about charities and the Red Cross and Spur, for example, I guess is a nonprofit. But we're a nonprofit that is exclusively dedicated to empowering the insured. So we are an insurance consumer advocacy resource. We are a source of information and a voice for all people who buy insurance and want to get treated fairly, want to get the full value of what they paid for, but also who need some simplified, clear guidance on this very intimidating product that, insurance, very, very opaque. What the policies are written by lawyers, high stakes, but very not consumer friendly as a product and as a system. So our organization is dedicated to trying to, give people the information they need. In this situation that we find ourselves in, that brought us here today, started developing about 6 years ago and is really has developed into a full-blown crisis. And it started in rural areas, right? So when people started getting dropped by the insurers that they had been with for decades, sometimes I've heard this story so many times. I was with blankety blank insurance company for 30 years. I never filed a claim, and now they're dropping me. And how can that be fair? We first started hearing about that from people in the foothills around the Sierra Nevada mountain range. And that was linked to the revelation in the news that there were 120 some million dead trees along the spine of that mountain range as a result of drought, bark beetle infestation because of climate change. So that hit the news, and for the first time in my organization has been around since 1991. So we've got 34 years under our belt of problem solving in the property insurance space. And this was the first time that we saw competition not working for consumers, right? So people would get dropped. And whereas in the past, we had this whole like home insurance shopping checklist with 3 columns, and you can compare this offer, this, and this, and decide which one's best and pick the one that's best. Suddenly, like that kind of strategy of like, shopping in the market became not really viable for people. And they were finding, as you've heard the 2 previous speakers say, suddenly things were changing, and people suddenly were like, shoot, I can't find anybody that wants to insure my home. So that started for us as a rural problem. And you might have heard Julia mention WUI. That stands for Wildland Urban Interface. That's basically an area where there's people living right up close to an open space area with a lot of trees or vegetation, right? So like that risky kind of situation. So we started working with a lot of partners, including Julia's agency, including the commissioner, to tackle this and say, okay, how are we going to help these people who are getting dropped? And we developed a lot of different strategies around that. And the commissioner developed his sustainable insurance strategy. And then my organization has been running a working group now for many, many years, trying to promote ways for people to reduce risk and be more attractive to insurers, at the same time working with people like the DOI, people like SIN, and even insurers to say, okay, what is the problem here? Why are insurers kind of on strike, and what can we do to fix it? And it's only been in the last, I would say, 2 years that my organization is based here in San Francisco. I live in the Sunset. Our offices are in the Sunset. And we didn't think this was a local problem until about maybe a year and a half ago. I was at a preparedness event at a church near me, sitting at our table, and people were coming by telling me, well, I have a multi-unit building in Chinatown, and I just lost my insurance. And I'm like, oh, great. Now this virus has spread to the urban areas. What is going on? And just to wrap up here, because I'm probably taking more time than you probably wanted with this intro, is to say what we originally thought was a climate change driven problem, I now have come to think is just as much being driven by insure tech, we call it, which is, the drone images they're buying and AI and all the information insurers now are using that turn you from a person, a risk with a risk profile, to a number. And once that number gets tagged on your house, it can be very hard to get an insurer to support you. So in summary, you can see our website URL on the side of my screen. We have a very deep website where if you're having trouble sleeping, you can go there and you can poke around. And there's probably more information there than you would even want or need, but we do have a whole section on buying tips for if you get dropped. What do you do? And so that's who I am.
Awesome. Thank you, Amy. So you started to get into our kind of first question, which is really about the current state of home insurance and the insurance crisis. So everyone at least who's joining this knows we're in an insurance crisis. The media has been covering it nonstop, especially after the LA fires. I wanted each of you to give a little bit more detail around like you know what you're seeing. I think Sin, you can talk about on the ground, what you're seeing in the Bay Area and San Francisco. And yeah, just kind of giving a bit more of an understanding. I think a lot of information comes through the news media, and that information is not always the easiest to digest and the most understandable, and doesn't necessarily give you the big picture of what's happening and also what actions are being taken. So maybe let's start with Sin again, if that's okay. And then we can go to Julia, and then Amy will end with you.
I'll be happy to. Thank you. And Amy, thanks for that context too. I think it was really helpful. And I was so happy when I met you last year, because I'm basically like your super fan and have been following your work in the news for many years. Before I zoom in on what's happening on the ground, I can't help myself, because I do have a public policy and land use background, that I do like to zoom out first. Just to lay the groundwork a little bit. Most people have seen in the news, 7 out of 12 of our largest insurers have fled the California marketplace. What people may not realize is how the remaining ones either have moratoriums on new business or very limited appetite, with many restrictions on the types of accounts they're willing to write. California homeowners have been continuing to get non-renewed en masse. Of course, we do also have an order from Commissioner Lara now that they have to hold on that for a year. But homeowners and HOAs are continuing to find a lot of trouble finding coverage, not only in areas considered brush zones, but tons of urban areas. SF is one of the worst. So when I plug in there's like 5 carriers that say they're still writing in San Francisco. When I plug in any addresses, it's either says it's ineligible due to catastrophe zone, that this zip code has a moratorium, or there's age restrictions of 20 years, 30 years, 50 years. And if it's less than 20 or 30 years, they need to show every single building permit they've ever gotten, and it has to be fully updated within the last 10 or 20 years. Often they'll need an inspection report from a licensed contractor within the last 30 days, and they drown you in so many documentary and evidentiary requests that it doesn't really get through underwriting. So the reality on the ground is there aren't a lot of viable markets anymore. We still obviously have a handful, and we tried to push with our personal relationships to get them through. But ultimately, I think Amy is right that there is some tech that's playing a role in this. But for me, it's much more of a regulatory and climate change issue. My theory is insurance pricing is at the center of a 3-way struggle. It's insurers saying that they're not able to price for cost, that costs are surging due to natural disasters, inflation, and litigation, and they have to be able to charge more. Regulators are caught between a rock and a hard place, saying they have to maintain affordability for consumers, and then consumers are just faced with these skyrocketing costs. And what we're seeing is homeowners in any areas that are viewed as higher risk, including fire-prone areas, are just being increasingly forced onto the California FAIR plan. And for those of you who don't know, that's the state's last resort insurer. It's a fire insurance pool that the state requires all property and casualty insurers to participate in, and provides basic fire coverage for high-risk properties. So as more private insurers are declining to provide coverage or renew existing policies, more and more Californians are turning to the FAIR plan. What we've seen is, as of December, I just pulled this up on the California FAIR Plan site, their total exposure is $529 billion, reflecting a 15.5% increase since just September 2024, and a 217% increase since September 2021. Just from this last LA fire, they got over 4,700 claims, And the plan is very over leveraged, very oversubscribed, at risk of insolvency. It has 377 million in reserve, 5 billion in reinsurance, but it can only access that reinsurance after paying 900 million in claims, which created a funding gap. And now they're levying a $1 billion assessment on private insurers to close that gap, which is then going to be passed on to consumers. So this could also prompt more insurers to continue reconsidering their participation in the California marketplace. And this combination of escalating claims, limited funds, and increased reliance on the FAIR Plan is definitely raising more concerns about long-term viability. And then we add in global reinsurance costs, rising construction costs, which have gone up 50% since the pandemic. Just the cost of the built environment is going up and up. And then Prop 13, which we'll probably get into a little bit more. This is all causing chaos on the ground for us. Like I said, we're being asked just for any, like a random sunset house. No one has, especially if you just bought the house in the last 10 years, you're not going to have all the permits of every update that you've ever done. We get around that sometimes by finding things on the SF. Like I've had to become an investigator and go onto like DBI websites and try to find what I can. We have a list of like licensed contractors and roofers who can go out and do inspections that they pay for now to get through it. But it's getting very difficult to manage. So that's my view from the ground. Would love to hear from other folks. I'm already taking up too much time.
Thank you, Sin. Yeah, and so I'll pass it to Julia, and maybe to balance out that, like, focus on kind of the reforms that the Department of Insurance have been working on over the last couple of years to address some of the issues that Sin brought up. And we'll also get to dive into those a little deeper later on too.
Absolutely. Thank you. And Sin, this issue is played over and over again all over the state in different areas, and it has been very concerning. When the commissioner came on board in 2019, where the very first thing that we had actually done after Paradise was actually when he was still in the Senate, was to create the moratorium for insurance companies for, you know, after a fire. Many of them were just dropping people immediately. And so then we at least were able to set that moratorium in place so that they did not drop people immediately after a fire, but at least give them a year to get them, you know, get everything together and be able to find insurance. And at that point, you know, we were still able to find, you know, other types of insurance. However, after our first listening sessions, we went to every county in the state and just, you know, tried to understand the issue, you know, in a granular level. And of course, we kept hearing the risk is too high. And insurance companies were immediately just saying, we just can't afford to have that much exposure. You know, the 12 top companies in the state were doing 85% of the business in the state, right? And so then, because of that, also they were just saying, oh, we are just way too exposed. So out of that was where, you know, the department started working with CAL FIRE and organizations that work with all of the issues with fire, and came together to put together the Safer from Wildfires framework. So that, at least that's the very first thing, because everybody was getting different information on what to do. So, you know, oh, your house is safe if you do one thing through the city, or the county had different set of standards, and just other, you know, everybody just had different set of standards. And so the idea was to just bring everyone together and set this up so that we can figure out what are the things that consumers can do on a personal level to make sure that they are safer, and that will be taken into consideration when we were looking at insurance. So things were done for your immediate house, your immediate surroundings, and for your house, your immediate surroundings, and then also as a community, what can a community do to get to, you know, to help to mitigate wildfire? You know, be safer from wildfires altogether. And so that was the intent of this. What came out of it was then regulation that if you did those things, insurance companies must then take that into account when they are reviewing your insurance when it's time to go to renew your insurance, and be able to look at those things and say, okay, if you have done these things, you are safer, and then you should be able to get some type of discount for for this. We were expecting, at first, when we first brought this up, we were expecting big changes immediately, and of course that just took a long time to get going. But we realized that wasn't enough, so we continued to work with all of the different organizations, and then came up with a sustainable insurance strategy. And with that, it's very much so looking at the overall, what are the things that we need to do to ensure that that we can improve the whole process. Through Prop 103, we have a system where we have, that not only does the department have to just make sure that the market is thriving and is doing well, but then also make sure consumers are not being taken advantage of, but then also make sure that the market is able to sustain all losses. And so one of the issues that we have with Prop 103, which was when the proposition that created the commissioner as an elected official, and then also made sure that insurance companies weren't able to then increase rates without having proper reviews and go through this whole process. The thing about that is that the way that the system is set up also, besides as we are growing, that the approval process is just very cumbersome. But also insurance companies, when they applied for rate increases, they would only apply for 6.9% increases at a time, because they could see if they did more than that, they will go into a hearing, or and so then that would just make their make the process just a lot more cumbersome. And even though maybe they needed a 10% or even 20% increase, they would only request that. And so because we have an intervener process. And so because of that, that whole system would just kind of slow down. And once they would get the approval, the very next day they would come again and apply for another 6.9. And it was just overall things. So what we are looking at with a sustainable insurance strategy was very much so improving the department's rate application process, approval process overall, looking within the department, getting the right, getting more people in place to be able to review that. But then also when reviewing the intervener process too, and saying, if you do have something that you need to bring, that you have an issue with an application, it needs to be something that is different from what the department has already done, and then be able to, or has already addressed, and be able to have a complete set of complaints with that. Also, insurance companies would have to provide complete applications. We are no longer accepting just some things here and there, but rather everything has to be complete. So we have made those changes within, but we also are working to introduce the climate risk management tools for rate making, so catastrophe modeling and reinsurance costs. So understanding that we need to use technology because overall, what we were seeing is insurance companies, of course, then saying this entire zip codes were just completely, we're not going to be able to cover those. And so at this point, what we're looking at is for people to be able, for insurance companies then to be able to see a little bit deeper into the area and be able to look at, okay, these homes are safer. And so then we're able to provide for that. Also looking at the FAIR Plan. The FAIR Plan is a pool, like you said. It is very much so a product of the insurance companies. Insurance companies run this. The state does not run this, but making sure that they are, not only are they, financially solvent, but that they are able to provide, comprehensive commercial coverage for HOAs or affordable housing developers or larger businesses. We're looking at how can we modernize the FAIR Plan so that it could be useful, but then also specifically making sure that we can get people out of the FAIR Plan. So the expectation is that as we put all of those things together, that we will be able, insurance companies then will be able to price according to the actual risk, and then be able to come into particular areas and do a lot more business. So if insurance companies would be allowed to come in and use the catastrophe modeling and use these other tools for rate making, that then we will be able to, they would then be able to do at least 85% of their business, of their new business in these areas where we have a bigger risk. So these are all, so that's the, that's the big commitment that the commissioner made sure of, that was included in all of this, so that it is, it is an actual commitment there from the insurance companies to write in these areas. So those are, those are several of the things that we're working on, and making sure that, after the fires in Los Angeles, everyone, of course, was just concerned, what is happening? What's going to happen now? This is a big, this is the most expensive losses, with fire. And so Commissioner Lara got together with all of the insurance companies, presidents, all the major insurance company presidents, and the governor, and addressed this with them. And they all said that they will continue to write in the state, particularly because, the department has been working to create the sustainable insurance strategy, so that we can actually put some things in place where the market can actually get back to writing. Of course, all of this was, all of the regulation and everything that needed to be taken care of was done within this last year. And so this year we are still working on putting together the whole process for using the catastrophe modeling. And so the expectation is that, mid-year, later in the year, that we may be able to then start using those. And hopefully that's when we're going to start seeing a lot more people, a lot more insurance companies writing. But at least we have the commitment that they will be writing, and that, the expectation is the more insurance companies that will write, then the better we will be able to see competition in the market. And then we'll be able to see people getting out of the FAIR Plan. And ultimately, that is the goal, getting people out of the FAIR Plan. I give you just a lot. I just threw it in.
Oh, that was a great overview. And we'll definitely get back to some of those, the things that you brought up. Amy, do you have maybe like a minute or two closing on this topic?
I mean, I think, look, we all want easy solutions to, these scary problems. This situation doesn't have an easy solution, or we would have brought it. I think, we've learned the hard way that we have no laws on the books that force insurance companies to take customers they don't want. And then insurance companies are for-profit businesses. So those are realities. And, there's been some movement towards some federal solutions and state solutions. But the realities are what we have right now, right? And so, I think people feel and understand that, okay, things cost more, so insurance should cost more. I think what's really the hardest for people is, well, how much more is fair? How much more is reasonable? And then also, why am I so vulnerable here to being just dropped? And what can be done about it? So we're all working on it.
Thanks, Amy. Okay, so Julia started talking about Prop 103, which kind of moves us into the discussion a little bit more of like how we got here and policies that put us here. We've already, obviously, climate change is one of the major reasons why we're in this position as well. But if there's additional things you want to add of, how we got to this point, if anyone wants to make additional comments around Prop 103,
I would love to jump in on that.
yeah, go for it.
And
I
would too.
see Dina also asked the question. I understand property insurance companies want to raise the premiums, but the insurance commissioner would not let them. Is this true? And if so, why? People wouldn't mind paying more to be safe and have peace of mind. And I think that's a very fair question. And the reason that property insurance companies aren't able to charge what they want and what they think is fair is all because of Prop 103. It was passed by voters in 1988. It totally reshaped the California insurance market and made it one of the most tightly regulated markets in the country with very strict rate regulations. And the reason carriers are leaving California is because it's not profitable to do business here anymore. It's really simple. So Prop 103 lowered premiums at first for consumers, but its long-term impact has very much contributed to today's crisis. What it did is now insurers have to get approval from Julia's Department of DOI before adjusting rates. And according to insurance carriers, they're not able to charge the rates that reflect real risk, including surging costs of reinsurance and climate change. Of course, Julia mentioned that they created this sustainable insurance strategy. I think many in the industry believe it is too little too late. I also talk regularly to carriers who tell me they are still waiting on their third, fourth, fifth year for their rate approval and rate review, that this is the slowest state that they work in terms of getting their rates approved and processed. And it's not just the rate, it's also their software. So they're we're not even able to introduce a quoting system with our new rates. So they're everyone else in the country is using a new system that was approved last year, but California hasn't had their new one approved for 10 years and we're still waiting. That's what they tell me. I would love to hear more from Julia if that's actually true, and Amy.
No, yeah. I thank you for bringing this up. And I was looking at the question and also wanted to make sure that that I addressed it. So as I mentioned before, because we have our intervenor process, California is actually right in the middle of how much it charges for homeowners insurance, according to the entire country, in comparison to the entire country. So we are actually right in the middle. And yet, as you know, California is one of the most expensive areas to live in. So it has not kept up, but it has been because of Prop 103. One of the, when Commissioner Lara came on board, we noticed, those are very much so the very quick things that we noticed on that. Also, he was getting reviews in binders, at the time. So this was 2019, and we were still getting all of this information in binders. And so that has been one of the big things that we have been working on, is actually making sure that we improve the processes within the department. So we did look inwards, and we are, we have made, we continue to make all of those changes. So we do that. But Commissioner Lara very much so when he came on board, spoke to the insurance companies and said, this is not working. You need to charge, you need to ask what what it is that you need. And so that is why for many years you only saw 6.9%, but now we're looking at 20% increases that people are asking, insurance companies are asking. So if we would have allowed people to get rate increases incrementally, maybe we wouldn't be in, where we are now, right? But because of that, that's why we are seeing this huge increases. The thing about it too, and it's important for us to know, because when I go to different events, people always say, oh, well, my insurance company got a 20% increase, but my increase was 80%. What is that? And so it is important for people to understand that it is when when insurance companies ask for a rate increase, it's, let's say, a 20% increase across their entire book of business. And so they have to work that out in regards to what is the risk in particular areas. So if there are areas, let's say downtown Los Angeles doesn't have the same type of risk that somebody in Malibu has, so Malibu will be charged a lot more. So their increases might be, 80%, 90%, we have heard 100%, 200%, like there have been just different differences there. So that is why that has been the case. Because of the work, when we came in, we did the work with the Safer from Wildfires, framework and all of that. All of the insurance companies had to apply for their premiums again, using that information to be able to make sure that consumers were getting what they were supposed to get, and so it was supposed to be, that's why a lot of companies reapplied for all of that, and so it has been something that we have been working on. Reinsurance has been, was one of the other things that, insurance companies have been, spending money on the insurance for insurance companies, right? And a lot of that California was one of the only states that didn't allow them to use that in their premium, in their applications for premium. So ultimately, that has been an issue of contention with the insurance companies. So part of the sustainable insurance strategy is that they will be able to use that now as an expense, and so be able to then be able to pass some of that on to consumers as well. But of course, being able to do that and being able to use the catastrophe modeling is contingent on them actually writing in these areas that are going to be more prone to fires, or not. That is not the right way to say that.
Can you remind me? Did they start? Is that starting 1/1/2025, or when were they allowed to start factoring in the catastrophe?
All of that is actually going to be when we are done with our PRIT process, which is basically reviewing the catastrophe models that they will be able to use. And so right now we have 4 companies that have submitted for that, and we are reviewing that and working that out. So when that is done, we're expecting to be, our hope is to be done by mid-year, and then by August or so, then we expect that insurance companies will be able to then start applying with the new rates, and be able to get, we'll be able to see the different, the different rates at that point, and then also the different, and then to see more insurance companies opening up in different areas. We have seen, one of the big announcements this last year was a few weeks ago, actually, was that Mercury Insurance was actually looking into again doing some business in Paradise and in those areas as well. So there are some insurance companies that are very much so committing to doing more business, but I think that they're also right now being very, just waiting to see where, when all of this comes into play.
Great, thanks, Julia.
Yeah, and thank you for clarifying that, and also for your office seeing that issue and responding to it. I think it's probably pretty clear to most people why insurers would leave the state if they weren't allowed to calculate climate change and catastrophes into their rate and reinsurance. But I do want to say one more thing. Another big hidden secret of Prop 103, not even hidden, is that it was written and put on the ballot by Consumer Watchdog, and it builds into the law the right for them to recoup all their legal fees to challenge each rate request. So they even fought these recent new efforts by Commissioner Lara's office, the sustainable insurance strategy that allows us catastrophe modeling and reinsurance costs, and they're frequently suing insurers and the Department of Insurance to block any rate increases. But I want Amy to speak to that, because I know Amy is a consumer advocate, and Also, there's some benefits to what they do that I'm sure she wants to highlight.
Well, that's, to be fair, when Prop 103 first passed in 1988, I was just getting out of law school, and I actually worked a little bit for them as a baby lawyer. But I quickly kind of realized that my style as a consumer advocate is I'm very pragmatic, like you were saying earlier, Sin, you're a pragmatic progressive. Well, I'm a pragmatic consumer advocate. And I felt that, yeah, it's important to try to keep rates down. But to me, it was more important to make sure that what insurers are selling meets consumers' reasonable expectations and what they deliver in terms of when you have a claim, is the product going to deliver for you? Is it going to be that peace of mind? And so my organization is really built around making sure that people get treated fairly by insurers, and that if they have a claim, that they get their reasonable expectations met, and that insurance is serving that function of putting Humpty Dumpty back together after the fall from the wall. Um, said, for many years, I did work pretty closely with Consumer Watchdog. But then, as the years started to go by, I started asking questions about when the crisis started to kind of first, rear its ugly head, and people were getting, couldn't find coverage. I was, of course, insurers have never liked Prop 103. I mean, they've been complaining about it since, for the entire time it's been in place. And I started to ask questions. Well, gee, is this intervener process, like, are we benefiting as consumers? And I have to be honest, I still have a lot of concerns about it. I think, Julia's agency has a rate regulation bureau. Like, that's their job, is when an insurance company comes in, and says we need to charge more, their job is to comb through that request very carefully and say, well, do they really need to? Because that agency is a consumer protection agency, right? So um, I have a lot of concerns about how the process evolved, and the fact that insurers now, for years they would know that they need to come in higher than the rate they need, because they knew that when Consumer Watchdog would come in, they would then have to negotiate together with the department, and they would end up coming down. So it was kind of this kind of regular thing that, that was sort of a game, really, which it shouldn't be, And so I think, look, we because we had worked with Commissioner Lauer when he was in the legislature, and because we felt that he and his team were taking a very practical approach to solving this problem. We have been side by side with them. So, when they've been out there in all across the state listening to people's stories, and every time my organization hosts one of our shopping help webinars, they always say, sure, we'll send somebody, we'll answer questions. So do we like the idea that insurers now are going to get to pass through reinsurance costs, or now they're going to get to use these predictive models that are less based on history and more based on projections? We're nervous about it, of course. We don't want to see people's rates go up unreasonably high. But what's happening right now is, because insurers are using those tools everywhere else except in California, we do have a target on our back as a state that is less appealing for them to do business in, and that has really, really hurt the consumers that we are here to serve. So, we're just trying to find the right balance here, and I think that by the end of 2024, insurers had gotten pretty much most of the tools they said they needed. They're in place. The department is proceeding thoughtfully, as they should, with their process of making sure that these models that insurers want to use are not going to grossly exaggerate risk, and to justify higher rates and all that. But unfortunately, the LA wildfires hit. So as you heard Julia say, things were starting to look up a little bit by the end of last year. All those regs got put into place, and, we knew that a couple of insurers had gone up to, like Julia said, up to Paradise, up to, where the campfire had been. They saw all the great work that people are doing to reduce risk. And one insurer committed to writing 200 new policies. Another one gave out grants for people to put gravel around so they would have safer defensible space and all that stuff. And we were just like, yeah, okay, we're starting to see the light here at the end of this tunnel. And then boom, the LA wildfires hit. But before we go any deeper into what those fires mean for us now, I want to say that it is my very, very strong view that if we didn't have the sustainable insurance strategy in place, if the department hadn't done what they did before those fires, I have no question there would be more insurers saying, you know what, we're out. And we're not seeing that. And when I have checked back in with the insurers, the ones that had started to have a little more confidence, and they've all said, we're probably gonna push back a little bit of our opening up, for another few months, but they're still signaling, and there is a couple of insurers that have taken quotas off of some agencies. All right. I know that Safeco has lifted some quotas for some agencies for how many new policies they can write a month. Farmers has also lifted some quotas. So we're on the road. And again, climate change is that inconvenient truth, and there is a cost to it. So rates are not going to come back down to where they were. The days of paying $1,000 or even $2,000 a year for your home insurance, I think, are probably behind us for good. And that's just because of everything we've been talking about. Things cost more, risk is higher. We're seeing weird things. And, I had somebody that lives in San Francisco, kind of near Golden Gate Park, got non-renewed, and their non-renewal letter said, because of wildfire risk. And I said, oh, that is so ridiculous. What nonsense. And then like 2 weeks later, there was in Brooklyn, where I'm from, there was a fire in Prospect Park. Luckily it didn't jump, the perimeter of the park, but things are dry, trees are dry. So we do have some challenges here that you cannot blame anyone for other than ourselves, just the way that we live and the way we fly around and drive.
Can I jump in on that and kind of dig a little deeper? So I think I think, Sin, you said this, it's better to have expensive insurance than no insurance at all, to have something that is there for you. But also people are really concerned about the affordability of insurance and them actually being able to have it be part of the, increasing costs, as we've talked about, across everything else. So what's if we need to increase costs to make our insurance industry work better and make this function and get us out of the crisis, what's the tools for low-income homeowners so that they're, not burdened with this additional insurance premium, higher insurance premiums?
Is that for me? Okay.
I certainly have something for that. So you guys could, however you want to go.
Amy, you started off.
Okay, so mitigation is very important, and somebody I think asked in the chat, well, what about, I think it was like a moisture sensor. That's a perfect example. I think a lot of insurers are saying, okay, what we need people to really upgrade their, if you have knob and tube, you got to get a circuit breaker. If you have galvanized pipes that have been around and you've never done any updating, you got to do that. If you have an old roof, we want you to fix that. Put a moisture sensor in. Insurers are very worried about water claims these days. That's a big reason a lot of condos have been getting targeted, is because there's some question about who's responsible for the walls and maintenance and all that. So we do need grants for people to do those to cover those risk reduction expenses. And we were kind of, before we had a change in the administration in Washington, we were totally heading in the right direction. Federal government was putting out these brick grants, and we're supporting a bill in Congress that would make your mitigation expenditures tax deductible. Obviously, if you're a low-income household, a tax deduction's not what you're looking for, but you're looking for a grant. So we do have grant programs for risk reduction. We are looking to build more of that out, just like we give grants for home for heat, reducing your heat, wasting of heat, increasing heat efficiency, right? So their grants are very important. There's a bill that's been introduced that would give people a tax credit to pay their increased premiums. And I have a hard time with that, because I kind of feel like if we're going to give taxpayer funds basically to insurers in a sense, we would really want to demand a lot more back from them. I would like to see more of the grants be available for low-income people to be able to make those risk reductions and qualify for the better premiums.
I agree with that. I think a lot of what we're dealing with too, and with inequality issues, is our decades of poor land use planning. We have not allowed upzoning, and we've basically prohibited multifamily apartments in urban areas, which has pushed a ton of development out to brush fire zones and created the super commuter phenomenon. And so the more that we can upzone urban areas, I think that also really helps, because when we're looking at pricing for risk, which is the actual way we can incentivize carriers to participate in the marketplace, they need to be able to charge for those people that are living in very fire prone or disaster prone areas. And if it's more lower income people that are living in those areas, we have to look at state backed funding mechanisms, as Amy was saying, or low interest loan programs for just risk mitigation and wildfire retrofitting. I think insurers should also be required to offer premium reductions for homeowners who complete that retrofitting, or do like defensible space around the perimeter, fireproof siding, steel roofs. And then we have to just look at the building code in general, and we need to take a wholesale look at that. Look at all these houses that are burning down and that burned down in LA. They're getting that insurance money and they're rebuilding another wood frame house in the same fire prone area. Like, we should be working with construction trades, technocrats, and rewrite the building code to allow more fire and seismic resistant construction methods. And then we need to force this industry to then give credit for that. Like what I was saying earlier about inputting a home's address and trying to get a quote from them. Right now, it just says, no, not eligible. I'm not able to rebut that and say, but they just rebuilt with fireproof siding and they put in like ember-proof vents, or like there's no rebuttals. It's just not eligible because of the address. So making sure that insurers have to credit that as well. And then expanding statewide by right legalization of those fire resistant construction methods would also be helpful. And then, of course, making sure that the DOI has to review and approve rate increase requests in a timely manner, not years and years. I think if they've surpassed a certain time frame, it should just be approved.
Yeah. Julia, I think that's a good moment for you. And I know I've been looking at AB 888, which is the California Safe Homes Act, which is, I think, grants for home hardening. I don't know if you want to talk through some of those.
I want to share, if it's okay,
Yeah, go for it.
with everyone. So these are the legislative priorities for the commissioner. And so we have all of the, I wanted to share with your group, particularly because I know that you all are very, very involved and can certainly support some of these bills. And so we're very much so looking at, like the California Safe Homes Act is the tax-free home hardening grants for safer communities. And what we're looking at is trying to see, and yes, looking at, the federal administration, we don't know how far we'll be able to get, there, but we definitely want to really work on that here in the state. The commissioner, saying it in a crass way, in a sense, but very much so. Look, we need to right now, where everybody's eyes are on the devastation of these fires, it is when we need to make these changes. And we are, we do have goodwill in the legislature at the moment. And so this is what these are really for. It's like, so we want to be ready for that. So it's very much so tax-free home hardening grants. The Business Insurance Protection Act, it's basically right now, the way that we have the moratoriums, it is specifically for homeowners. And we did not include businesses for that. And it wasn't, it was just oversight on our end. So we absolutely want to make sure that we include businesses in that, and that is, HOAs, nonprofit organizations that need to have that protection as well for the moratoriums. The Fair and Transparent Insurance Fees Act, it just basically makes sure that public adjuster fees are capped. So that they don't take advantage of people. As you know, of course, you see at every disaster, people do have this money on hand, and there's going to be all kinds of people who want to take it. And so we want to make sure that we do everything that we can to make sure that people are not taken advantage of. The list, what we're trying to do is make sure that that insurance companies are actually, pay for the full contents coverage without having to do a detailed inventory of all of their losses. We are hearing from people who are just devastated because they have to come up with this entire list, right, of all the things that you have lost in order for you to actually get money back. And so we want to make sure, right now we do have something in place where people can get at least 30% or up to $250,000 of their content insurance. But we want to make sure that, is it possible for us to then just expand that just overall when people have lost everything, that there's no need for a list for them to get their entire content coverage. We also are looking at the California Community Fire Hardening Commission Act. It just creating a statewide Wildfire Safety Commission, an inspection system for our Safer from Wildfires, making sure that we are able to make this something that is just throughout the state that is used. The Deceptive Disaster Relief Advertising Act, making sure that people don't when they are doing advertising, that they say that this what they are actually doing, they are soliciting, because people do get confused, thinking that they are going to like a state agency or something. So the California Wildfire Public Model Act, doing the first public wildfire risk model for transparency. We're actually trying to make sure that California as a whole, not only we're using the ones that are coming in, that we're reviewing those, but that California itself has that available. The Insurance and Wildfire Safety Act, regular updates to wildfire safety regulations, and the FAIR Plan stability, strengthening the FAIR Plan with catastrophic bond access, so allowing them to sell bonds to be able to have the money available when they need it. And then finally, the savings accounts for mitigation and catastrophes, creating the tax-free savings for home hardening and disaster costs. So just wanted to make sure that I share this with all of you so that you know who is doing what and what are the bill numbers, so that you are able to to support wherever you can. So thank you.
Yeah, thank you so much for sharing those. There's so many pieces of legislation that your department is working on, and others that are definitely coming from the wildfires. And for people on the call, there's lots of opportunities to get involved with supporting these. You can write advocacy letters. You can go and speak in front of the commissions, show your support, show your Me Too for these different pieces of legislation. And if you want more support in doing that outreach, feel free to reach out to me, because I'm also going to be following many of these bills in my work and supporting many of them. So thanks for sharing that. On that note, since a lot of those really touched on risk mitigation, and we were starting to get into the conversation around risk mitigation, I was curious to hear from all of you, or whoever feels like you have a answer to this. After the LA fires, there's been a lot of governor executive orders around rebuilding and kind of speeding up rebuilding. And I'm curious, what you all think in terms of, there's been some things from the governor around limiting new developments to not have to meet the existing building codes and just have to meet the requirements from previous building codes. And I know that Spur were particularly concerned on some of those around new seismic requirements that have been updated. And also we have all of these goals around electrification that have gone into building codes in the last few cycles, and those won't be included. But then there's obviously all these other resilience measures that we in rebuilding need to consider. So I just wanted to hear from each of you, what's your thought in this moment around the rebuilding process and what should be considered?
Well, I can jump in on that, and then if just my organization, we go to wildfire impacted areas and help out, right? We bring our free classes and stuff. So, after the fires in the North Bay in 2017, we did a couple of years of support programming there in the area. And it's really interesting. There is and the same thing is coming up in LA where there's a tension, right? A lot of people are underinsured. They don't have enough coverage on their home. And so the cost of complying with building codes can make it harder for them to replace their homes. So there is pressure on public officials not to enforce building code upgrades. So like exactly what Sarah was just saying. And so you have this there's one force going that way, right? Just remove the obstacles, let us rebuild, especially because we don't have enough insurance in the first place, and now we have to, okay, so there's that. But then you really do have, like, when you're looking at the future, you want people to rebuild resilient, so when we saw all these people after 2017 put pressure on the local building department not to hold them to the energy efficiency requirements, for example, or you saw a lot of people rebuild with wooden fences right up to their home, which experts know is like a wick, basically. If you live in an area where there can be a wildfire, you don't want to have a wood fence touching your house. But people like their wood fences. So there's also like an aesthetic push as well. And I think, one of the first things we heard after the wildfires in LA, of course, the governor is trying to help people. He wants to remove those obstacles. But then you heard all this like, well, will we want to knock out the Coastal Commission, preventing people from building right on the beach again, the way maybe they were there. And so there's just tension, it's really, it's easy for us who didn't lose homes to say, well, they should, stick to those, to compliance with those codes. And, if people go to a good agent like Sin, hopefully they have this code upgrade coverage that would cover those costs, but not everybody has it. We have pushed in the legislature here in California to require agents to recommend this code upgrade coverage, because then they do have a little bit more available insurance funds to cover that, because we do want people to rebuild resilient, but it can be very hard.
And that coverage Amy is speaking about is called ordinance and law coverage. I build it into every property quote I provide, but many agents don't. So be sure to look at your policy to see if you have ordinance and law coverage.
Yep.
One of the go ahead.
Go on, Julia. You.
Well, when we were speaking earlier about the FAIR Plan and how now it is a all the insurance companies do have to put money in to pay that assessment, that $1 billion assessment. I saw a question in here earlier. Sorry, that was just our insurance companies leaving because they don't want to they don't want to grow, because they don't want to pay that assessment. They don't want to make that part of this. And so we did work last year, actually worked with the FAIR Plan and to try to figure out, ways to improve this. And the idea, when we did do an assessment previously, we did it in I believe it was 1991, through a fire that happened in Malibu and Altadena. And so we are looking at now, again, we're here. And so two things we were able to do. One was to make sure that then the FAIR Plan was able then to, if they did need to get a, make that assessment, that insurance companies would be in the hook for half of that. And then the other half, they could then pass on to their consumers. So at least, you know, we were able to cap that, and also cap it to be able to pass it on to consumers only for 2 years. So every, you know, consumer won't have such a huge bill in that sense. However, the idea then is very much so looking at this, and this is where we're you know, looking at the end of the day, if we were in 1991 having the same fire and had to do an assessment because of the expense that that fire cost, and then now we're here in the same place and we are making an assessment in the same areas, that needs to, you know, I'm hoping that, you know, our leaders and everybody that is, you know, in these you know, in these communities will look at and then say, okay, what do I need to do to make sure that I build safer from wildfire? So our safer from wildfire framework is very much so the thing that we are really pushing for people to understand. This is what you need to do to make sure that your home is safe, that your community is safe. But then at the end of the day, be able to use that as the basis for, you know, for rebuilding, so that they do, you know, they do a little, you know, a little bit better at least, and we're not here, you know, in another 20 years. So that is the, you know, that is the hope in that sense, that that's why it was set up. But also the idea of, with the sustainable insurance strategy, is that once, if you do those things and you are safer, that you are going to be the home that the insurance companies are going to want to come and then get out of the FAIR plan quicker, because you are safer. So then you are not such a big risk for them. So, you know, for everybody, you know, what we are really asking is to, you know, do your best to try to make your home as safe as possible, so that way you know, insurance companies will start fighting for you again, rather than you fighting to find an insurance company.
Thanks, Julia. Sin, did you want to add anything?
No, I think Amy addressed it very well. There's a tension here. It's hard for me to side either way because I understand the urgency in just getting people back into their homes. But if there was a way to create incentives for more future-proof, climate-proof construction methods, I wish that could be integrated. I also think in the future we have to think more about prefab construction. It's a way to get a lot of climate-proof construction out there quickly and in mass.
That is absolutely true. And in fact, one of the, you know, one of the solutions for people who don't have enough insurance down there, which is, you know, a lot of the people with the FAIR plan, for example, or people who just trimmed because they had to, you know, try to make the policy affordable, what have you, or the insurers didn't set the right value, what have you. Is manufactured homes, which is a new, you know, that's the new phrase for mobile homes, right? But it encompasses a broad range of things, from tiny homes to prefab, to some of the new resilient rebuilding technology, which is like insulated concrete forms and things like that. So, you know, there's a lot of really good work going on. And, you know, it's just very unfortunate that these fires hit when they did. But I think, you know, the motivation for people to come back stronger after they get knocked down like this is a, you know, it's a sort of a human trait.
Yeah, definitely. So I want to go to the audience Q&A in a second, but I had one more question, and it's more on, I think we've been talking a lot about the individual, like, homeowner scale mitigation that you can do. What about the broader community scale, like, risk mitigation? I know voters passed the climate bond, Prop 4, last year, $10 billion. And I think it was 1.5 billion for wildfire prevention projects that hopefully goes towards preventing these types of major disasters in the future. I know the city of Oakland, last November, voters also passed a wildfire prevention district fund, where property owners are being assessed for a special tax, and that money is going to the city to then do wildfire prevention and fuel reduction efforts. So that's really great, especially because Oakland has seen a major wildfire like this in 1991. So I was just curious if there are other examples of these types of more like community scale risk mitigation efforts that you've seen that have been effective.
Well, certainly the areas that have passed bond measures, like for example, Marin County passed a bond measure, and they're using that money to do matching grants because it's a more affluent community, so people can afford half, but not all, and not everyone. But and then like you mentioned, the East Bay, and I think has also done that. Oakland did that. Actually, they did it once and it worked. They got this bond measure through. Then they did it again and it failed. So I mean, look on seismic, on earth, seismic risk reduction. San Francisco has done a very ambitious retrofitting program for multi-unit buildings and buildings on corners, and so there's been a really great effort there for not for individual homes so much, but if you are insured with the California Earthquake Authority, which not enough people are, but if you are, they do have a brace and bolt program, a grant program where you can apply for some money to help you, do that kind of retrofitting. I think we have a ways to go with getting insurers really on board on not just like we want, the rewarding risk reduction through mitigation discounts and improved eligibility. We've made little, some baby steps there. The department, really California, I think, might have been the first state to mandate the mitigation discount, that insurers must give you a discount. A lot of states have said that they should. And then here in California, we said they must. So we're on the road here. But I think insurers are still, they still need to really drink the Kool-Aid that we've all been drinking, that we're not powerless in the face of climate change, that there's a lot of things we can do to reduce risk. And it's just a matter of being willing to do that hard work and pass these measures and pay a little more taxes so that there are funds available to help people do what we know they need to do at a community-wide level. Because I can tell you, having been in the trenches with insurers now for many years in the rural areas, they've been saying, well, it's great when one house improves their chances, but we need lots of houses in the area to do it. And in our urban area, wildfires not necessarily our risk, but they are worried about fires following earthquakes, and the fact that, we've got all these houses right up against each other. And that is part of, what you hear them say is they're worried about that. That's where that technology comes in that I mentioned earlier, that they're getting all these reports from their vendors that sell them data, and that those reports identify fire following earthquake as an additional peril that they worry about in urban areas, in addition to water damage claims and older buildings with older systems.
Yeah, I'm glad you brought up earthquakes and earthquake insurance. I think that's a really interesting connection and something like to learn from. Like, we had these major earthquakes that like the private insurers were unable to cover these major damages, and the state created the California Earthquake Authority to be able to provide insurance. And like you said, people haven't, I think it's like 10% of
If that.
if that, yeah, in some areas much less.
I'm sure Sin has a bear of a time trying to get her clients to buy it.
I even let my own lapse, to say.
Yeah, Julia, did you have something to add?
I do. I wanted to just add, part of I keep harping on the Safer from Wildfire framework, but one of the things that is part of that is the community mitigation, right? And so you're absolutely right. It doesn't matter how safe you are, you make yourself. If a house down the street is, it's just not in good shape and catches on fire eventually, with the winds and everything else, you would as well. So the idea behind the Safer from Wildfires framework is very much so using the community model to look into, what can you do as a community as a whole. So fire-wise communities are seen as those communities that can, or fire-safe communities that can that can work together to make sure that they are that they are safer. And you can build a fire-wise community with 8 homes. So it is just, it's as simple as that. You can get 8 of your neighbors and, in some areas, be able to come together and then create your community. But the good thing about doing that is that you as a community then can apply for those grants for all the different things. And so people are doing chipper programs where, everybody once a month or even sooner, everybody gets together and grabs all of their extra fuel that they have throughout their home, cleans that up and brings it up to, up the street and gets rid of all that risk. The idea is very much so, for us, for people to work together to make sure that all of that is safe. So there's that. There's also the fire risk reduction communities, and so those are local agencies located in the states that very much so, like in very high fire hazard severity zones, they do the best practices, and so they are certified by the California Board of Forestry and Fire Protection, and they are able to do that. Same thing, be able to use that as a way to decrease their fuel load, let's say, and become safer, but then also be able to use that as part of their insurance, be able to bring their insurance down in a sense. The idea, is very much so to get ourselves safer, get ourselves, bring down the risk as a whole. We are going to be presenting, within the next couple of weeks, we're going to be updating some of our frequently asked questions. We're going to be updating some of the stuff that we're doing around the Safer from Wildfires framework, because we do want to encourage people to do that and work with their local fire departments to make sure that that they can review those things that you are doing. And unfortunately, this is not a one time and you're done type of thing. It's something that needs to be kept up. And so we have. I remember going to Orinda and Moraga, and they all gung-ho did all these wonderful things to clean up their area. But then, the expectation was, okay, we did it once and that should be, we should be done. But no, it's, these things continue to grow and today. So you need to continue that in order to be able to see the difference. And so the fire department actually, came back in and said, yeah, we did it once. We need to continue doing this. We need to continue working with our local communities to make sure that we are safer and that we are, that our risk comes down as well.
Yeah, I think that's a really important part. And I've seen definitions around like resilience isn't like a finalized state that you like reach at some point after you've done, XYZ things. It's a continuous process of kind of adapting to the new, things that are happening in your environment and making those mitigation changes and reducing your risk. Just, it's going to be a forever process. Okay, I want to go to the audience Q&A now, and I think we'll do that for most of the rest of the time. So please, audience, if you have additional questions, add them in. I'm going to start, since I had mentioned at the beginning that we were going to talk a little bit about the connection to housing and the housing crisis in California and San Francisco, and we have mentioned it in various moments. But there's a question from Barbara Skinner. I'll read it. So the housing element mandates and builder remedy in San Francisco and the state, how can a fair balance be maintained between old buildings and new construction that meet newer building codes? So hopefully that means more resilient. in this moment of the insurance crisis, how can SF build 82,000 new units for affordable housing when there are around ensuring new insurance policies to empty units puts a huge added burden to existing homeowners trying to maintain their home. So I think this question is like, we're trying to build new housing. There's challenges around ensuring maybe that housing, and there's additional questions between like the balance between older housing and newer housing and like the costs of insurance between those. I don't know if anybody has any comments on this question.
It's actually very easy to insure new construction. Insurers love new construction, especially in multifamily buildings that have like steel frame construction, masonry, non-combustible materials. That's the easiest possible property to insure. It's the San Francisco older single family homes that no one wants because a lot of them are over 80 years old, 90, 100 years old, and they don't. And for them, it doesn't matter if it was taken down to the studs. You put like the year built into the system. And then even if it was fully remodeled, everything, that already takes it out of eligibility. So the new housing is actually not an issue when it comes to insurability.
And then there was, I think, sort of like a clarifying question around Prop 103, which is, since this was a voter ballot initiative, is there a requirement or like, should there be legislation that repeals Prop 103, or what's the process for kind of removing the requirements around Prop 103? And I think, Julia, maybe this goes to you.
You know, I think that might be more of an Amy question. I know
Amy,
that there are.
Yeah, it's because it was a ballot initiative. It requires, I think, a 2/3 vote of the legislature, which is, tricky. And I think it's because, look, elected officials, they're a little bit afraid of Consumer Watchdog. Consumer Watchdog does not pull punches. They are famous for they've been going after the commissioner since the day he took office, and I have felt it was very unfair. But I think lawmakers would be very nervous about saying, yeah, I'm okay with removing, this consumer protection measure that has helped keep rates down. And in fact, insurance companies will say they complain all over the country about rate suppression by elected officials who, are afraid to tell their constituents the truth and all that. And, I do think the truth always lies somewhere in the middle, right? I think, somewhere in the middle of what insurers say they need, and what's the right price. So that's why, you can certainly write to your elected officials and ask them, but I'm telling you, when Consumer Watchdog wanted to go after Commissioner or Governor Gray Davis, they ran an ad of a milk carton, and they had, the missing child thing. And then they had this picture, missing. So they go hard, against anyone who they feel is, is not right. So, and of course they do some good work. I don't mean to, I think, they've kind of, because this crisis has gotten so, intense, and they have not really been bringing forward solutions at all, other than just attacking the commissioner for rate increases, which is not a solution. And there's a big fight going on right now, because State Farm has come and said, we need an emergency rate increase. So and they do have a huge market share in the state. They insure out of every 5 homes, fault or no fault. Maybe they shouldn't have gotten that big, but they did. So when they're going to the commissioner and saying we need a rate increase, and Consumer Watchdog is in the commissioner, brought Consumer Watchdog into the meetings with State Farm, and they're just taking a very hard, no compromise line. And I think, what we're worried about is, State Farm can non-renew people outside of the moratorium areas. And there's really not that, the commissioner can't, he only has so much authority here. And so if that happens, if they, if there's more and more and more non-renewals, we're going to see more upheaval in the market. Not that I think it's right that State Farm is sort of holding us all up here like this, but I can't help but feel that if they weren't in the situation, that they wouldn't be begging publicly, for this emergency rate increase if they weren't in a difficult situation with their books, and they already did get a rating downgrade.
To me, this is one of the reasons why it was so important to have this event, to educate people about Prop 103, because people are like, why aren't they allowing more rate increases? Why is it like this? So I don't think we're in the position yet where we can overturn it, because there's just not enough public awareness about it, and they actually do pretty good PR generally. The pendulum is definitely swinging. Like, there's growing outrage about this crisis. What used to be an insurance crisis is now a housing crisis and a business crisis and an economic crisis for everyone. So certainly that landscape is changing. But I'm not sure we're quite there yet where we have the political will to undo it. Maybe we're getting there soon, but we need more and more events like this. And for people who came to this event to share information about why our system is like this and what regulatory challenges we have with your friends and neighbors.
Yeah, but I will say, I mean, the commissioner has put a whole bunch of new rules in effect, and they really haven't had a chance to work yet. So on a lot of levels, I feel like we need to give them a chance to work, and we just have to get through this current crisis with the State Farm thing, and and try to help people really understand that you've got a gay Latino statewide elected official. It's not like he's going to be going, yay, rate increases, unless he feels like there's a good reason. He's a Democrat, he's been a consumer advocate. So he's just navigating really white water right now. Really, really tough.
I really agree, Amy. I think a lot of these new reforms, when they come into play, are going to have a big impact, and they're really welcome and appreciated in the industry as well. And even though I'm speaking from the industry perspective, insurance carriers need oversight. They get greedy, as everyone knows. They need oversight. I think it's very important to have these consumer advocates and regulators in the space. I just think consumer watchdog is a little bit over empowered.
It's amazing how afraid elected officials are of crossing them.
Yeah, everyone is terrified of them, especially because they recoup all their legal fees and they just go around suing everyone all the time.
Well, I'm glad you said what you said, though. I mean, insurers, they do have to be kept in check. And, and the department did lose a lot of personnel during COVID in the early years, and they did slow down on the approvals, but they are definitely making up for it now.
Yeah.
So
yeah, absolutely. The department has made a lot of changes and a lot of improvements. And so the expectation is, as you know, government works very, very slowly. And for the department to be able to have gotten all of the regulations in place within a year from when they were introduced, and just moving everything through with a sustainable insurance strategy, that has been quite the accomplishment there. So we continue to work on that, and yes, the department may not be very popular, but I do want to remind people that we are there. If you do have an issue with an insurance, any type of insurance, we do have our insurance experts who can talk with you and walk you through your policy, and go through any issue that you may have. They can contact the insurance company and work with you on that. So I do want to make sure that how to get a hold of us. That our website is insurance.ca.gov, and if you don't want to talk to somebody directly, you can chat. We have that in place too. But I do want to make sure that you do know that that there are people there that are going to be able to walk you through how to talk to your insurance company and make sure that you understand your policy, and that what you should get with that as well. We also have 300 strong Fraud and Insurance Investigations Department. So we do, when you feel like you have been taken advantage of in any way, shape, or form, we do have folks who are sworn police officers who will be able to tackle this and work with you on that. So please, we have seen this last week, have heard of people, getting their cars towed and having to have a really hard time trying to get things back without any recourse. And so we are very much so looking at what can we do to help and make sure that we let people know of just different things that they need to be on the lookout for, and be there available for you if you need us. So please, our number is 1-800-927-4357. We'll put it on the chat as well. But just want to make sure that you know that you can contact someone at the department and that they'll be able to help you.
Awesome.
Sorry with my little commercial there, but
No,
I
that
just
was great.
make sure that you knew.
Yeah, definitely put that number in the chat. I'm sure that will be helpful for people. So I think we are actually going to try to end a little early because I know we've been going for a long time. But there were a couple of quick questions that from the Q&A. One of them was for Sin and related to your comment around not renewing your earthquake insurance. So this is from Diane, and it says, we live in San Francisco and have earthquake insurance through CEA. Does Sin have a comment on whether it is reasonable to continue paying increasing rates as she recently canceled her insurance? So curious what your thoughts are.
Oh, I think it is really a personal question in each person's family risk calculus. I decided to just take the risk and save that money, but I think it's always, as an insurance professional, it's always smart to have insurance. I think it would be irresponsible for me to tell people not to have earthquake insurance. It's obviously your home is, in most people's cases, their biggest asset. And so leaving that on the line is definitely a big deal. There are higher deductibles there, but I think it's still worthwhile. I just made the personal decision to try to roll the dice for a couple of years because I needed the money elsewhere.
Yeah, I mean, listen, the point that Sin made is spot on. I live in San Francisco. I have it, but I'm the only person I know who has it. And I have to say, like, it is a tricky calculus because with my deductible, I'd have to have like over 100,000 in damage before I would see a nickel out of the policy. So I definitely get mocked occasionally by my husband for the fact that, I pay it. But I just, again, it's a personal decision on risk, right? You heard Sin say, I decided to roll the dice for a couple of years because I needed that money. As long as you're thinking it through and you're not going on a rumor and you actually get a quote and you make the decision in an informed way, that's fine. I happen to have a wood frame house with what they call a soft story, meaning, I've got a garage and my house is built on top of that. So plus the work that I do, I just couldn't not have it. But I think most people go through this decision and say, gosh, with the deductible so high, I just don't think it's worth it. And I don't judge people for that.
I'll add to that because a lot of my work is actually around earthquake resilience. And Amy, I think you mentioned the CEA's Brace and Bolt program, which is a grant program for homeowners to retrofit their homes. They also recently launched the earthquake soft story program, which is for 1 and 2 unit buildings that, like Amy said, is built over a garage and has a seismic vulnerability. And they're also in the process of launching another program that is for multifamily buildings, soft story buildings. So more 3 to 20 unit buildings that need to be retrofitted. And so if you are they're giving those grants to people who have insurance through CEA. And they're also connecting that to premium reductions for doing those upgrades. So there are benefits to having that insurance, and you might be able to access some of these grants to actually get your home retrofitted and hopefully reduce your risk. So I think it's beneficial. Okay, so I think we're gonna close out at 7:45. So I just wanted to have a second to do maybe some closing comments. We didn't dive too deeply into the FAIR plan. So if you have any comments around the FAIR plan, But just, what's the takeaway for our audience of what should they be doing and paying attention to in this moment? And, I think there was also an interesting question in the Q&A around, if we get back to a competitive market, is that going to reduce rates? And I think, Amy, that's something we talked about when we were prepping for this session. So if you have any comments that you want to share, each of you can take a minute to close out.
Do you have an order you want us to go, or?
No, whoever wants to jump in.
Okay.
Amy, take it away.
All right. So when we do our shopping help webinars, here's basically the only tips we can offer for, so if you get dropped, you get that non-renewal notice, then you start shopping right away. Don't procrastinate. Don't put your head in the sand, start shopping. If you want to try to bring the premium down to earth, you want to carry a higher deductible. I carry, a $5,000 deductible. You can go even higher than that, whatever your comfort level is. Then you want to work with a really good agent. This is not a great market to try to shop on your own or shop online. I think it's better to work with a human, who actually has, and an independent agent is going to give you the best shot at different options. You definitely want to try to keep your dwelling insured to value, meaning like don't skimp on the amount of coverage on your dwelling. And then these extras that we talked about, the law and ordinance or building code upgrade, it's worth paying for that. It's worth paying for an extended replacement cost endorsement just to kind of protect you against inflation. But I think, for a lot of people, if you end up in the FAIR plan, keep shopping. The market is changing all the time. There are some new entrants coming in. If you're looking at what's called a non-admitted insurer, like a brand you've never heard of, you really need to work with an agent who can put their reputation on the line and say, yep, I've checked out their financial condition and they're strong. And even though they are less regulated and, they've got enough money to be able to meet to pay their obligations. That's sort of pretty important because there is this other category of insurance company that might be an option. And finally, if you let your insurance lapse and you have a mortgage, your lender is going to put forced place or going to put a policy on. And that is just not a good deal for you because all it really protects is the lender and the amount of the loan. It's not going to protect your investment in the house or your assets. So those are kind of my basic tips.
I will. I just add to that as I have been harping on the Safer from Wildfires framework. I did put that on the chat, so that has been sent out there. There's just a lot of tips there that you can look into, and so that can help. But also, just want to remind you that if you want to have someone just review a policy with you, even if you have any type of real just general question or something that you don't understand. I always think, I remember when I was buying my house, they just gave me a whole list of paper, right? And you just signing and signing and signing. And really, I'm sorry, I did not read every single thing there. And so I know that, maybe with your insurance, you were looking at that too, and maybe you didn't read everything through. Please give us a call so that we can we can review that with you. If you are having any type of issue, we do have people who do casework management that we'll be able to call the insurance company on your behalf and work with you on that. So just know that is available for you, that is something that you should take advantage of. So that you are, that you have the most information and you can see eyes wide open when you are dealing with your insurance companies. So thank you so much for having me.
Thanks, Julia. Sin, do you want to say something in closing?
Yeah, just get a good agent. It obviously doesn't have to be me, but there's just like working with any professional service provider, there's a very wide spectrum in quality and caliber of service. Make sure you work with someone who knows what they're doing because again, you're not going to read a 200-page policy. Make sure that they know exactly what to look for and what coverages you need. Make sure your coverage A, your dwelling replacement value, especially if you live in San Francisco, is at least $400 a square foot. I've seen, especially people rolling off State Farm and Allstate, way too low. And in a total loss, they get less than half the value of their house often. So and that is supposed to be the replacement value of your home. Other than that, I just want to say insurance is something that's like the canary in the coal mine. When it's in crisis, it's going to ripple out to every other aspect of the economy. So I think it's something we all really need to raise the red flag on and make sure that we're developing some sustainable solutions. I'm really heartened by a lot of what Julia said today and the reforms they've put into place. I think that's much needed, a little bit overdue, but very happy it's happening. It's happening. And just want to thank everyone for participating in this important conversation and to my panelists for being here.
Awesome. Yeah, I'll make a final comment, which is, I mentioned the climate bond and this wildfire special district in Oakland. When those things come up in your city, whether it's around fire or other hazards, it is so important to support them and to vote for them. And, that is part of the holistic process of getting us back to a more healthy insurance industry. So remember the big picture when those things come to the ballot and you have the opportunity to vote for them. So with that, I thank you all so much. Thanks for letting me moderate this panel. It was really great to be here with all of you. And thank you to the SF Democratic Party and the Westside Family Democratic Party for hosting this talk. So thank you all. And if Sin or anyone else wants to give a final note, otherwise I think we're good to go.
Thank you so much.
Thank you, everyone.
Good night.
Good night.